Welcome everyone to another special edition of Weekly Meetup. Tonight we have Aaron Warwick back to present his latest pick, and we're also going to have a new segment we're going to try called the Skeptic. So we'll see how that goes tonight. But first, a quick disclaimer: Story Trading is not an investment advisor. Investing in securities involves significant risk of loss. This event is being recorded. Parts of it will be distributed on social media. Real quick, you can go to storytrading.com, click on performance, and you'll find if you go there, before we turn it over to Aaron, he's had 7 picks so far at Story Trading with a 47% average return over 102 days. That's 167% annualized. So we're excited to hear about this pick from Aaron, which last traded at 71 cents. It's a pink sheet OTC. So Aaron, you can take it from here.
All right, thank you, Ben, and I look forward to the new, what do you call it, where you like kick back on my pick, whatever.
Yeah,
Devil's advocate,
the skeptic. The skeptic. Okay. Yeah, I'll see how it goes.
The David Shawkix. Yeah. So I'm presenting tonight on Gatekeeper Systems. They're a Canadian company. They trade on over the counter GKPRF in the US and GSI.V for the Canadian exchange. And so Gatekeeper Systems, they've been around. And by the way, I plan, Ben and others, to pass along like a sort of a thesis summary in a Word document, either tonight or tomorrow in the VIP investing room. That'll like have some of the hard copies, but when I present companies, I just like to sort of do it without a formal presentation.
I threw up a chart for people to look at real quick.
Appreciate it.
Yeah, GKPRF.
Right. So just to give a little bit on company background, the Gatekeeper is a video and data solutions provider for both public transit and smart cities. We'll get into the smart cities and what that means if you don't know here in a little bit. But Gatekeeper was recently named one of the top 10 technology companies in the 2021 TSX Venture 50. And they hope to become, they're far from it now, but they hope to become $1 billion data tech company. So right now, what Gatekeeper does, they sell both hardware and software. Much of what they do is multi-source. Of their multi-source hardware comes from China, and that is part of what's hurt their margins. We'll talk about that here soon, in part due to tariffs. But where their real opportunity is on the software side and the AI side, the data collection and integration. So currently, Gatekeeper has 34,000 mobile data collectors in use in over 3,500 different school districts. Most of those, it appears, if not all of them, I'm not sure, it might be all of them, are in the US, even though they're a Canadian company. And then they also have a prominent relationship, and we'll kind of talk about this and how I think it's going to help them expand with what we refer to as SEPTA, Southeast Pennsylvania Transportation Authority. So the acronym there again, SEPTA. And so the primary goal of Gatekeeper is to leverage their AI capabilities to make so-called smart decisions. And so this leads to what Gatekeeper refers to as a platform as a service model, because they do, ideally, they would install the hardware and manage that on a school bus, for example, which is their sort of bread and butter. But then they would also, from that would expand with a school district or with an organization where they would provide a SaaS type offering. And so they can do both things or a combination of them. And they also actually can work on, they can use third-party hardware and then install their software on top of that. They've got 2 really primary markets and 2 places for possible explosive growth. And I'll start with their with the first one is, again, their bread and butter. It's the K through 12 schools, and specifically school buses. As I mentioned, they work with over 3,500 school districts right now. And they can do one of three things. They can sell that just their own mobile video cameras. That's one thing they can do. So just the hardware. And that is on some of the buses. In addition to that, they could sell their camera plus their SaaS-based software solution. Or they could sell, like more ideally would be that they would, or that would be the ideal, I'm sorry. But then the other thing is they could install the SaaS-based software on top of another company's video cameras. And that's actually not a bad deal either, because they end up, as you can imagine, with a lot higher margins on that type of business versus just selling the hardware. A couple of tailwinds that they have as it relates to this K through 12 market. You've got a tailwind in the US and then a tailwind in Canada. In the US, the National Transportation Safety Board has recommended that all states pass legislation that would allow video cameras on buses to be used in stop arm violations. And a stop arm violation, it's actually kind of funny, right? Like right after I started investing in this camera, I took one of my younger kids to a bus stop, to their bus stop, and they get out, and the stop arm comes down, the stop sign on the bus, and my older daughter who can drive, comes and like blows right through it. And I'm thinking about, it's a good thing they don't have Gatekeeper on here yet. But so what the stop arm violation is, when the stop sign is down, you can't pass the bus. You're not supposed to pass the bus. My 16-year-old daughter didn't know that. She found out the hard way when I got on her case right after that. But anyhow, so the stop arm violation, or what the cameras can do and what Gatekeeper can do, is they can actually take a picture if somebody violates that and it gets their license plate. One of the things that Gatekeeper can do is they can actually connect with the law enforcement and with a city or a county or whatever, and they can get your license plate number and then automatically send you a ticket. We'll talk about that, especially when we get to the smart cities side of things. But anyway, the National Transportation Safety Board has recommended that all states pass legislation allowing video to be used in these stop arm violations, which evidently are fairly common. The second thing that's sort of the tailwind in the US, a bigger tailwind, I would argue, is that recently the federal government passed a law that the America Rescue Plan, which gives like $130 billion or something like that. I've seen different figures, 122 to $130 billion to help schools with reopening with COVID. So there a couple of things as it relates to that. First of all, one of the things that Gatekeeper can do is they actually can do temperature checks. They can do contact tracing type stuff with their SaaS-based solutions. They can check on social distancing on buses and things of this nature. So that's a good thing, but I don't think that's the main thing that schools like long-term are going to want them for. But it's interesting that they have those capabilities, because what it does is, like, a lot of if you talk to school administrators, like, they're not, the schools, the government and so forth doesn't operate the way that private businesses do. So a private business is like, okay, this is a good investment. It's going to pay off in the long run. There's a good business case to use this. Okay, schools are, and the government, it's all about funding. So, like, do I have a way to fund this? And as it relates to some of these cameras, it's like, it's hard to get funding. And so the schools are not going to prioritize that necessarily. Well, when you talk about the American Rescue Plan, it's like, okay, all of a sudden we have all these funds, and a lot of schools in the country are already open. I know my kids have been in school for a while now this year. And it's like, so this would give them an opportunity to purchase some of Gatekeeper's products. And then because you do have the contact tracing stuff, you do have the social distancing, you do have the temperature checks, you can really easily justify this as being COVID related. and reopening related. And as it relates to this point of the American Rescue Plan, if you look at Gatekeeper's website, just the last month, April, they had 3 press releases that related to school district wins that I think are connected to this American Rescue Plan and this move, even the broader move from the NTSB. So the first press release was a school district win for interior and stop arm video evidence recorders. And so that is something that a lot of schools are looking for now. The second one relates to Gatekeeper's ability to provide a software solution, the SaaS-based solution, on top of cameras that were already installed. And part of what the CEO, Doug Diamond, mentioned about their abilities in that press release, one of the things he called out was this passenger counting and contact tracing. Again, like, this gives you a really good argument, to use American Rescue Plan money for this solution. And then the third press release was where the company actually added on a new SaaS layer to their current capabilities, which is what they call intelligent video search software to view, analyze, and extract video segments to assist in situations such as a missing child or analyzing student and driver behavior. And so basically, my understanding of what this does in terms of intelligent video searches, and like, instead of you having to go back through and like watch hours of tape, this solution will like pull out, what they've identified through their AI as being like, something that was that appears like it could have been problematic. So that's the U.S. side of things, the American Rescue Plan, the NTSB, for them to expand in the K through 12. Then, actually, this was something new to me this week, and I followed up with the CEO after it. I wasn't even planning to present on this, but they came out with this press release last week that Canada has issued a report. They issued a report like right before the pandemic. It was February 14th, Valentine's Day, 2020, called Strengthening School Bus Safety in Canada. And it was basically by like their version of the NTSB. And what they said is that, and I guess cameras aren't that common on buses in Canada, but they basically said that every school bus should have a camera that would capture infractions like these stop arm violations, and would have an exterior 360-degree view. And so the press release related to Gatekeeper was that British Columbia and Ontario, those provinces, had equipped buses with Gatekeeper's data solutions in a pilot program. I followed up with Doug Diamond, the CEO. I said, hey, is this an exclusive deal? Is this like multiple competitors? He said, it's us and another company. And I said, so, what are the chances? What do you think? Like, are they going to go exclusively with you? Are they going to do, like maybe they just split it up? They don't want to put all their eggs in one basket. And he said, look, we have, one never knows what's going to happen, but we have more capabilities than our competitor that's also part of the pilot program. And although they would probably never say like, we're going to just go with Gatekeeper, they can write the request for proposals when if they decide to move forward with the program in such a fashion that we're like the only ones that can provide the technology that they need. So this is a huge opportunity for them actually to get involved in the K through 12 market in Canada. And then finally, as it relates to the K to 12 market, let's see, when was it? Back in, I think it was March, maybe February, Gatekeeper made an announcement. They have a partnership with a company called ByteCurve to deliver this product called Clarity, which is a software solution for school bus scheduling and dispatch, and as well as driver communications. And so basically what this Clarity would do is it would provide the ability for school districts to be able to send out an app that parents could join that would tell you like when the school bus is, where it is, and so you can know when it's going to arrive. And I know like dropping my kids off for the bus, I mean, it can vary, 10 or 15 minutes. And sometimes it makes me late for things, and it's like I would have just left my kid there, if I would have known like the bus is on its way. But I mean, sometimes I wonder, like, did I miss it or what? And I wait there and it shows up late. And so this, what Clarity does, it would allow, and then if like there's a wreck or the bus breaks down or something like that, it can automatically send out an alert to the parents saying, hey, there's a situation, we'll be 30 minutes late, or the bus broke down. If you can pick up your kids, or we got to get them on another bus, or whatever the case may be. So I think there's actually, good opportunity for Gatekeeper down the line with that. So that's the K through 12 side. The other side that Gatekeeper is really involved in is in the public transit. And again, their only contract, it's one they actually bought back in 2018 from another company, is with SEPTA, the Southeastern Pennsylvania Transportation Authority. And what Gatekeeper has done there is they provide, again, cameras for their buses, and they've been expanding with SEPTA slowly but surely. And they've got about $25 million in bookings with SEPTA right now, which is up from 8 or 10 million a couple of years ago. And they think it could grow into $100 million in revenue for them. That would be a multi-year contract, but considering the company, does 20 million a year right now, or the last full fiscal year, obviously a huge contract for them. So how can that happen? Well, Gatekeeper quoted a contract recently to SEPTA after a proof of concept was requested by them, that would result in $20 million of business annually. So what is that business? Well, what it is that Gatekeeper would provide these stop arm would be able to take tickets of people who violate the stop arm. They'd be connected somehow through the software with the city or county database, and would automatically send a ticket to stop arm violators. And what's interesting is, what kind of opportunity is this for SEPTA, and primarily for Philadelphia, the largest city in southeastern Pennsylvania, is they currently estimate that they lose probably $90 million a year in stop arm violations. And then the other thing is in parking violations. And so what Gatekeeper is working on now, the SEPTA contract led actually to a contract with the City of Philadelphia Schools. And now they're working with the City of Philadelphia directly on this whole lane infraction issue, and then also ticketed parking violations. Again, $90 million a year they estimate. The City of Philadelphia estimates they lose on this business. And what Gatekeeper is doing now, and I'm not 100% sure. My understanding is that this probably isn't totally known by everyone yet, but they're testing putting these cameras on garbage trucks. So you think about in a big city like Philadelphia, you might not be allowed to park on certain sides of the street on certain days of the week. And so, well, what happens? Well, the garbage truck comes around. They can't get to garbage cans because there's a car in the way, or even maybe they can, but the car is not supposed to be parked there. Well, the garbage truck driver doesn't have to stop and take down the license plate. Gatekeeper's camera automatically takes a picture of this vehicle and their license plate and automatically issues the citation through the software system. And so my understanding as it relates to Philadelphia is they've completed this proof of concept with Philadelphia. Evidently, the people at SEPTA and the City of Philadelphia, I'm told, were blown away with what Gatekeeper offers. And they're working with them now on a request for proposal. And there's sort of a discussion going on, I guess, in my understanding, with the City of Philadelphia, whether they're going to go out for a full request for proposal or whether they're just going to do a sole source contract with Gatekeeper. But regardless, Gatekeeper management, in my reading of the situation, seems to be extremely positive about their opportunities there. Then there's also the city of Toronto. There was an article just published in the Toronto Star on April 29th that kind of mentioned this. They did not mention Gatekeeper by name, but I've confirmed that it relates to what Gatekeeper is doing. And that is that Gatekeeper is looking to expand their, not just the school buses that are on part of that Ontario deal, which is, this is probably actually how they landed that Ontario pilot. But what it is there's some sort of public transit, a train, I guess, that runs down the center of the streets in Toronto. And then when they stop, like traffic's supposed to stop because people can get out and go get on the sidewalk and go to wherever they're going. Well, you know, people just blow through that, I guess, a lot of times. And so a train may stop, but somebody's in a hurry, they just decide to keep going. And so there's an article, and again, I'll try to remember to send this link. It wasn't originally in my, I just found out about it recently, and it wasn't in my original document. I'll try to remember to add it. And if anyone recognizes that I forgot to do that, let me know. But this article in the Toronto Star about how the city's looking at putting cameras on these trains so that when somebody blows by, again, they just take your license plate number, they issue the ticket. And, you know, this is all automated. In addition to that, I'm told from people that I've interviewed that are close to the company and sort of know what's going on, that they're working, or there's cities that are highly interested in. There are different levels of discussion with New York, Dallas, San Francisco, or some of the bigger cities that they named. But the gist of it is this: if there's two huge opportunities for Gatekeeper. Number one is just to expand within SEPTA. So they could quadruple their bookings with SEPTA possibly within the next year, just expanding there with the Southeastern Pennsylvania Transportation Authority. Same thing with the city of Philadelphia. If they went, which is separate from SEPTA, if they win that, something there, that could possibly double, triple, quadruple their bookings and their revenue, annual revenue, just with that. City of Toronto, again, same thing. Now, if they win all of these, obviously it's like a grand slam, right? So presumably, you know, everything's not going to work out for them exactly perfectly. Maybe some of these will take more time than others. But the point being, there's a lot of opportunity for Gatekeeper, both this year and in the future. And as it relates to that, the company's been very conservative as how they expand, even within SEPTA, try not to bite off more than they can chew. And so they're kind of trying to do these things one at a time so they don't end up getting over their head. Next thing I want to talk about then is the financials and their guidance. They just recently issued, I think actually this past week, if I remember right, they issued their second quarter results. So their fiscal year, I can't remember now when it ends exactly, but it's not the same as the calendar year. And the company, it looks sort of weak, like at first. But if you look at their historical, and they point this out in the earnings release, so their last fiscal year was $20 million. I think they were like $8.3 million for the first half of their fiscal 2021. But the first thing they highlight in the press release is that the first half revenues, and I imagine a lot of this has to do with their work with school districts that usually have a different fiscal calendar than the normal calendar year, is that 27 to 35% of their revenue comes in the first half. So if you extrapolate that out and assume that this year, you know, and they point out like the past 5 years, it's been 27 to 35% of their revenue in the first half. Then you get to like 23.5 on the low side to 30 million on the high side. In my talking with the company, I honestly would kind of be surprised if they end up lower than that 25 to 30 million. They might even end up higher. But the thing I do want to stress is, you know, I view Gatekeeper as a longer term play. I do think it's undervalued immediately. We'll get to that in a minute, but I do view it as a longer term play. So to me, like whether they land one of these big deals and you know, whether their fiscal year 2021 ends up at 25 million or 40 million is like sort of irrelevant in the grand scheme of things when you're talking about, you know, who cares? Like if a contract that's going to quadruple their current bookings with their largest customer. So if you land one of these contracts, whether you land it in June or December, like in the grand scheme is pretty insignificant, because a lot of that revenue will be like, SaaS based or what they call PaaS based, but regardless, it's recurring revenue and it's higher margin. So I'm not so focused on what they do this fiscal year as I am on, what their opportunities are that they may land in the next, 1 to 2 years. So a couple of, concerns I might point out, and Ben may have more. I don't know. We haven't talked about this at all, so I don't know what Ben's going to come up with. But so their margins have decreased recently. There's a couple of reasons for that. The first is the tariffs. A lot of their hardware is from China. But they've actually, if you look at the most recent quarter, even though their revenue was lower than Q1, their margins were significantly higher. And the reason for that's twofold. Number one, they have done some things to minimize the tariffs. They've done some cost-cutting measures. They've also passed it along to customers in the prices they're charging. And then number two, recently, a relatively high amount of their business has been for equipment sales. Okay, so that lowers your margins in the near term, but it's good for the margins long term, because most of their customers now, significant percentage of them that order the hardware, are also going for some of these SaaS-based solutions. So what that means is then, you sell them hardware now, but like for the next 3-5 years, you're selling them software that's coming in more in the 60% range versus the hardware that's been at the 40% range. And so that's why you see these two changes that they've made, or different mix in their business here recently is why the margins went from 41 to 49%. And my belief in interviewing management is that we should expect to see that 49% should sort of be a good ballpark, if not perhaps a low number going forward. And then finally, as it relates to their financials, unlike a lot of companies that are in this growth stage, they're actually profitable right now. I mean, they're not making a huge profit, but last fiscal year they made 4 cents a share. They're break even right now in Q1 and Q2, slightly positive, but evens out to like 0 cents a share when you round it. But then again, like most of their revenue comes in the second half, so they should be positive EPS again this year. And then they also ended the past quarter with 3.4 million in cash, and I think it was like operating cash flow in the first half of this year, if I remember right. I said it was over 8.5 million. I thought it was like 4.5, so I'll have to double check that. But anyway, it was significantly positive. A couple of risks. The biggest risk is just, they don't win some of these contracts. The second one that I would point out would be, the opposite, that they win too many too quick. Maybe they get in over their head. And then the third one would be that they are most likely going to need to raise some cash. And I shouldn't say they need to, but they want to, because they got 3.5 million in cash. If they get $100 million contract, let's say from the city of Philadelphia or from SEPTA, they would like to see a little bit more money on their books. So it's one of these things, Mark Gomes talks about it, the raises where you need the money versus you want the money. This would be a situation where they want the money just to have a stronger balance sheet for some of these bigger contracts, not because they're going broke. Final thing that I want to mention then is the valuation. Right now, it's just, to me, it's crazy. I mean, I view this very similar to ProTech, a medical company I follow that's also listed in Canada and then OTC in the US. Both them and Gatekeeper are looking to either go to, in the case of ProTech, they're looking to go to the NASDAQ. They've already applied for that. In the case of Gatekeeper, they're going to either do NASDAQ, or they may go to the main Toronto exchange versus the venture exchange. In any case, Gatekeeper's trading right now about a 20 PE ratio. Given the growth rate that they're looking at, I think that's, pretty small. Given the recurring revenues, that's not a very high multiple. If you look at price to sales, they trade at less than 4 on a trailing basis. They're expecting half their revenue this year to come from SaaS-based revenue, or again, what they call PaaS, platform as a service. So, I mean, this is like, really small compared to a lot of companies in this recurring revenue cycle. The one that I would compare them to is Rekor Systems. They're focusing on smart cities. Rekor does have 70% gross margins. Again, the last quarter, it was 49% for Gatekeeper. So obviously, Rekor has better margins. But in terms of like sales, they're about the same. Rekor expects to do about 25 million in sales. I think, Canadian 25 to 30 million would be a good number to think about. I think that's basically, you can count on that for Gatekeeper right now, but it could get even higher, up to that $40 million area. But nonetheless, they're about the same size in revenue. Rekor has 3 analysts covering them in the US, compared to 0 for Gatekeeper in the US or Canada. But Rekor is not profitable. They have significant negative earnings per share and negative EBITDA. But because of that coverage and perhaps because of the margins, they're trading at a valuation of 40 on forward price over sales, and a trailing valuation over 100. And again, Gatekeeper trades at price over sales of 4. Again, you can't compare them on PE ratio, because Rekor doesn't earn any money. So what I've done in evaluation, again, I'll send this out to the community, but make a couple of assumptions. I'm told that Gatekeeper should be at like 50% split between hardware and SaaS sales in 2021, their fiscal year that ends in 6 months. And so about 15 million of that would be, I'm going conservative on the numbers. I think 15 million would be the SaaS based, $15 million on equipment. And I'm using a 10 times multiple on price over sales, way lower. I mean, 1/4 of the forward valuation of Rekor Systems, and then a 2 times multiple on the hardware, just because, and I give that a little bit higher than a 1 to 1.5 times sales, because almost always now these hardware sales are leading to the SaaS-based revenue. And so taken together and then adding the cash into that, what you get to is that Gatekeeper's valuation would be about 140% higher than what it is right now. So I think that's, I mean, in my opinion, that's what they should be valued at right now, based on what they're expecting to do in 2021 on again, a fairly conservative side. And if they don't do it in 2021, then look, I mean, like it's going to be a couple months behind that. That's not a big deal. And then they have, several big potential catalysts after that could lead them to, realistically quadrupling their revenue down the line. So I think 140% is sort of like what I view as a base case. I think they should easily get to these marks that I mentioned, and I think a little bit of coverage, perhaps uplisting, will get them a little bit more exposure. Maybe our community will help them get more exposure. I mean, obviously, as with most of my picks, I'll probably try to write on them soon for Seeking Alpha and anywhere else that's interested in promoting it. And one of the things I like about Gatekeeper, again, I mean, they're already profitable. So I see the downside is low. When you're talking about a current valuation of 20 PE on a company that has good growth potential, I think it's a fairly safe investment. And I think you've seen, if you look at their chart, I mean, anytime it gets down to that in the US, I don't remember Canadian, I obviously trade the US, but anytime it gets around that 65 to 67 range, you've got buyers that prop it up. So knock on, it seems to be fairly safe at that level. And certainly when it's been dropping there, I've been a buyer. So with that, I guess I'll turn it over to questions or turn it over to Ben, and we'll see. We'll see what this will be interesting. I'm a guinea pig for this, Ben. So I
All
don't have
right.
no idea what he's got for me. So
That-
hopefully I'm ready.
Thank you, Aaron. I don't have much, honestly. I didn't have a lot of time to research this, but a couple of things that I had you touched on. So there's probably only one thing that you didn't touch on. So those three areas, valuation, which we talked about, but I'll present a little bit of a different angle on that. So valuation, potential management issue I want to bring up, and you talked about the exchange already. So let me share my screen here. So in terms of valuation, you talked a lot about the relative valuation to Recor, but when I'm looking at these metrics here on Y charts, when you just look at it, the relative historical valuation, you see that the enterprise value has really skyrocketed the past year, at least we're looking with not a huge increase in the revenue. In fact, the last quarter kind of dipped. You see the 12 months trailing has been inching up a little bit to 16 million. So I wonder, is this a case of, you're really speculating about future revenue rather than is this undervalued right at this moment? That was point number one. Let me just present all three and you can come back to it.
Okay.
Point number two, I looked at management on the website, and the first thing I saw was Doug Diamond has been around since 1997 as the founder. So I don't know the story there, but I just know that Wall Street often punishes companies that have been around for a long time but have not yet succeeded. So I don't know the history there. My financial data only goes back to 2017. So I don't know if they were doing great before then and they were just private, or if they had a history of really not making it yet, because that's some 24 years. So
Right.
That's something that, Wall Street could punish the company for. And the other you talked about, the pink sheet status.
Right.
That could be an issue when you talk about valuation and the PEs. That stocks certainly take a hit, I think, in terms of multiples it'll get. And also, it's just microcaps right now are not in favor, and
Right.
I'm not sure when it will come back. It's been our community really focuses on microcaps, and we had an awesome second half of the year in 2020 and first couple of months of 2021.
Right.
But that's unusual. Money usually gravitates towards big caps. So is that money flow going to come back to microcaps? So those are the three things I had: is the kind of relative historical valuation, the management issue of this guy's been around forever, and again, the pink sheet stuff. You touched on those, but again, in terms of perhaps you talk about that 160% or whatever, the relative valuation versus Recor you're looking at. I see REKR is NASDAQ listed. So maybe your price target's a little bit too aspirational given those.
Yeah. Well, yeah. So if I could answer those, I mean, and again, obviously everybody makes their own decisions, but so the thing that I'm impressed with, well, I shouldn't say impressed with, but the thing that sort of makes me really comfortable with Gatekeeper is that I don't think that they're overvalued by any means. Again, a 20 PE for a company that's been showing some good growth and certainly has a lot of potential down the road. So I don't see a lot of downside. Let's put it that way, right? So they are actually, they have positive EPS, they have positive operating cash flow. So I don't see a lot of downside. And again, you see that the buyers are stepping in. Now, keep in mind, when I talk about recourse systems, I'm just trying to use a comp of someone that's focused. Now, recourse is not in the K through 12 market. They're focused on smart cities. And that's part of what, you would sort of call what SEP is doing, what the city of Philadelphia is looking to do, what Toronto's looking to do. And so keep in mind, when I'm using them as a comp, I'm not actually, and when I'm using this valuation and where I say that, I think that the Gatekeeper right now could be or should be 140% above where they are. I'm discounting significantly off of Recourse. The Recourse is trading at 40 times price over sales on a forward valuation and 100 times on trailing. And I'm applying just to the SaaS-based part of Gatekeeper a 10 times multiple. So 1/4 of that, because their margins are a little less right now. Although on that part of the business, they're actually a lot better. But just overall, their margins are not as high. So I'm trying to be like really conservative on this valuation. I think, you could make the argument that they could, but I mean, when I see a big gap like this, I'm not gonna like, to me, the difference between 140% and 300%, like right now, is like almost irrelevant, right? Like they're way undervalued. I'll start worrying about that difference as soon as the stock doubles. Should I sell some? Should I, start making the argument it should be higher? So, I mean, even when I'm using Recourse as a comp, I'm way backing off that comp on Gatekeeper. And then what was the other? The management.
Yeah.
Yeah. Honestly, that's something I need to look into a little bit more. So I will say I've been very, very impressed with Doug Diamond. He started this business out of his apartment with the bookkeeper. Ended up, and it was all focused on the hardware side of things. He ended up, according to him, and I haven't verified this, he ended up selling to Boeing and Lockheed Martin some of his cameras. And then my understanding of this is where I need to look into it more. I mean, I just, I do as much research as I can on these, and questions come up. And this is actually something that came up that I thought, I need to look into this more myself. So the reason that they're GSI.V on the Canadian exchange is there was some sort of merger between Diamond's company and then this publicly traded, I don't remember if they were just called GSI or what the name of that company was, but that's how Gatekeeper inherited this SEPTA contract. So my initial thought, and that I would need to verify, and maybe Florian or someone else in this call can answer it, is that knows it, but is that Diamond started this company, this Gatekeeper. He was mostly doing some of the hardware side. He started getting into some of the software stuff. They merged with this GSI who had the SEPTA contract. And so I think they've been around, well, I know they've been around, like you said, since 97 when Diamond founded them. But I think this SaaS stuff is, fairly newer to Gatekeeper. And so this is sort of like a new area for them to get into. Those would be my initial responses to that. And then obviously, I mean, like nobody can argue that, I mean, obviously the OTC, you're not going to get the same love that you're going to get on NASDAQ or somewhere else. But they are looking to remedy that. It will probably take them, getting more cash on their balance sheet to uplist on the exchange side of things. Again, they're going to need to do that. And by the way, I don't think it'll be overly dilutive. I don't think I think they're going to do it from a position of strength, because again, it's not like they desperately need the money. They just want it because, again, if SEP is going to give this little company a $100 million contract, they'd like to see a little more than $3 million in their balance sheet. But in terms of just staying open and doing business as usual, they don't need the money. They're already cash flow positive. Did I hit them all, Ben?
Yeah, great. If you could just, before we open up to Q&A, just comment real quick on the chart here. I want to know from your perspective, is this move...
Jeez, Ben, what do you got on your desktop there?
Oh, wrong screen.
Everything you've ever done is on.
Yeah, there we go. All right, so this move from, the COVID lows, was this really warranted? Is this off of fundamental changes, or can we attribute it to all the microcaps just doing great at the latter half of 2020 into 2021? If you can kind of explain this chart a little bit.
Yeah, I mean, I think it's fundamentally based. I mean, again, look, the company, it's not like they're raking in the dough, but I mean, they made 4 cents per share. They're trading at whatever, what, 85 or 87, I think, on the Canadian exchange. I mean, you've got, around a 20 PE. I think it's absolutely justified, what they did on a fundamental basis. And again, as it relates to this company, I mean, they got several different tailwinds that I think can lead to continued growth. You've got the American Rescue Plan. You've got this Canadian thing, whatever it was called, strengthening Canadian school buses or whatever. I don't have it right in front of me on the screen right now, but you've got this Canadian report. You've got the pilot programs in British Columbia and Ontario. And then you've got several cities that they're in deep conversations with. I mean, what I was told is that they actually worked with the city of Toronto to write the RFP, the request for proposal. So, I mean, that kind of tells you where they're at with Toronto. I mean, is it possible that, Toronto, and I'll send this article again, but is it possible that the government in Toronto doesn't pass the law that allows for this to be where they have the cameras on the train and to automatically issue the tickets? It's possible. Did they choose somebody besides Gatekeeper? I mean, it's possible, but if Gatekeeper wrote the RFP for them, they're gonna, probably they've got a good shot at getting the contract. And again, any of these things could significantly, materially impact Gatekeeper's near-term and long-term revenue and earnings. And if you get multiple of those, even better. But the chances of none of them coming to fruition, very unlikely. And I'm told, by the way, that I think there's going to be more developments that we'll hear about soon as it relates to what's going on in Canada. That opportunity actually sounds pretty significant to me, what they're talking about doing with the school buses in Canada.
All right, Aaron, great. Thank you very much. We're going to open it up to Q&A. As a reminder, the recording will only be available for VIP members for the Q&A. We edit that out when we post it on social media, so you don't have to be shy. If you have any questions, go ahead, put in the chat or raise your hand. In the meantime, I'll invite Rob, my partner here, if he has any questions for you, Aaron. Go ahead, Rob.
I actually have some comments. So I owned this company 8 months ago because they got involved in temperature sensing for the buses. And I think that might have caused like a large increase in interest. Unfortunately, I didn't dig deep enough because I just checked the website as you were presenting, and they have a large build out. Just looking at their website and their like product portfolio, it doesn't remind me of like an OTC company. I think they're OTC just because they're like based in Canada. But I work for a company that helps make microprocessors, and we're discussing like Internet of Things and the future of products. And as you look over their product portfolio for like sensing around buses and keeping kids safe and using AI, it looks like they're in the right direction. It reminds me of like SMSI and their products a lot. They're a little farther ahead of like where people are thinking, but as society catches up to that, you'll see a lot more demand for that.
Right.
And I think that's why you may not have seen like the huge growth in this company or interest in their products, but I think it's coming in the next few years. It's going to be all people are talking about. It's like Internet of Things and making people safer with cameras, and the buses will probably be a huge target. Everybody wants to keep kids safe. But
and it's interesting you bring up that. So like, I understand what you're saying about COVID, and like owning them 8 months ago. For me, when I first started researching them, and people were kind of like stressing that, and the company even stressed it in a few press releases, I was like, okay, that actually made me less interested in the company, because I'm like, I mean, seriously, how long are we going to be checking kids' temperatures on buses? How long are we going to care about, contact tracing? How long are we going to care about social distancing? And then I was like, well, wait a second, just like you said, like that's like that kind of stuff is now an excuse, if you want to call it that, or a way for people to say, oh yeah, this is part of the American Rescue Plan. but it's like what the school districts really want is they want the stock bond violations. They want to know, like, if a kid is being bullied on a bus, like they don't have to go look through, hours of video. The gatekeepers, their AI is going to tell them, like, oh, here's a couple scenes where it appears that, kids are getting too close to other kids and there might be some bullying going on. Here's, somebody complains about the bus driver. Well, here's a couple situations where the bus driver did X, Y, and Z. You don't have to go looking through hours and hours and hours of video to try to find, the diamond in the rough. And so that was actually like, I had the opposite, coming at this 8 months after you, of thinking like, okay, I mean, nobody's going to care about this stuff later. But it's like, well, wait a second, actually, that might get your foot in the door, but you actually have all these other capabilities that people care about, like whether there's a pandemic or not.
Yeah, I agree. I had the same vision when I first saw them. I was like, oh, they're all
Right.
about COVID. And I wish I took a closer look because they have some great products.
Yeah, they do. Thank you, Rob.
All right. We got any other questions? Not sure. I don't see anything. So I think what we'll do, we opened up a GKPRF research group. So Stephen, if you can drop that link into WhatsApp or into Zoom so we can continue collaborating in the VIP room and also here if you'd like to have a more focused conversation. Upcoming events, you can just go and click events. Let me just show you real quick what we have coming up. We have Jonah Lupton coming back this Wednesday to Story Trading. He'll be talking about UPST, and we're going to try to get the Skeptic section into UPST. We have a volunteer to be the Skeptic on UPST, so we'll see how that goes if Jonah agrees to that. And then the following Wednesday, we got Mark Gomes presenting on qualitative factors in pro investing. I believe next Sunday night is still open, but we have a couple presentations in the pipeline that might get filled that might be taken on that Sunday. So we'll let you know about that. All right. And with that, follow us on YouTube and Twitter, please. Story Trading. And we're going to move on to Trade of the Week. Thank you again, Aaron.